How does BMW, how do you assess the changes in foreign ownership that's been announced by the government here? What does it mean about you reassessing your China operations?
No, I mean, it gives us opportunities for the future. We're welcoming the opening and the new policies from the Chinese governments, but we rely on strong partnerships, and we have a 15 years partnership with our company Brilliance on the BMW brand, and we would like to continue that. And we are discussing on the Mini brand a new potential joint venture with Great Wall, and we will explore the opportunities for the future, but we continue strong partnerships from the past.
That partnership with Great Wall around the Mini brand, how close are you to finalising that? Has it put a pause on those discussions as you assess the changes in the regulatory environment?
We are in the early phase of the discussions, so it's too early to say when we conclude these discussions. We are in good discussions, and we will see what the opportunities for the future are. Our BMW is driven by long-term strategic partnerships, not short-term opportunities only. So we will see, and we would like to set that up for the Mini brand, because I believe there's a huge chance for localizing Mini in China, especially electrified vehicles, as this will be the biggest market in the world.
Does Brexit play a role in that consideration as well?
No, that is a strategic cooperation, because if you would like to further grow the Mini brand in China, you need to know and you have to localize, otherwise you're an imported car brand, which limits your growth for the future.
You produce a lot of vehicles in the US and export them from the US. How concerned are you about potential retaliatory measures that China may take?
I mean, BMW was always driving a strategy which is a well-balanced distribution on sales and production across the globe. So we have a huge operation in Spartanburg with our plant in South Carolina, which is the biggest plant in the world, and we are exporting 70% for sure to China. And we also have now the 6th localized model in China, the new iX3, and the iX3, the all-electric first BMW core model. And you can see that we are well balancing both sides, but I'm a clear ambassador of free trade, because that creates wealth on both sides.
What does the iX3 SUV concept tell us about the direction of BMW and the priorities?
The priority is clearly electrification, also autonomous driving, but electrification as the first priority. And it shows what flexible cars and architectures and production systems we have, because we will launch the X3 in China here this year, and in 2020 the iX3, the fully all-electric vehicle, and we can build it on one assembly line. So if there's a higher demand for electric vehicles, we build more electric vehicles. So we are absolutely flexible, and our journey is electrification with localized models.
How much are you investing in electrification? Because we saw VW last night announcing an additional $18 billion from its partners. They're spending a lot. Are you playing catch up with them?
We are definitely spending a lot, and we have spent more than 52 billion rand renminbi here in this country. But if you think about this year, we are spending alone 7.0 billion euros for R&D, which shows this is the biggest investment ever we had for R&D. And this is for electrification, for new models, for autonomous driving. We are in the hottest phase of our model offensive, like new X models like X5, X3 coming, X4 on the market, next year X7. So we invest into products, we invest into technology, electrification, and we will be the leader.
How much is that driven by a desire to catch up again with Daimler?
It's driven, first of all, to be the number one. But number one is not only volume. Number one is for us defined in terms of employer attractiveness, in terms of brand strength, in terms of market share and volume. But we would like to beat Daimler by 2020.
In terms of the growth that you've seen in the first quarter out of China, what is the picture looking like?
The picture is looking like we are having around about 7% growth in the first quarter, so a high one-digit number. We are optimistic that we definitely continue with this one. And with the new X3, where you can order by tomorrow here in China, the first cars coming on the market in June, I'm optimistic for the second half in China, as we will have a push by new models.
So approximate sales numbers by the end of the year in China?
I mean, we are last year have been by nearly 600,000, and there's a clear target to deliver more this year.
How challenging is the European market right now?
The European market varies a little bit, because there are countries like Spain or Italy where we see further growth. Currently, A little bit decrease we see in the UK due to pre-Brexit discussions. The market is go down, is decreasing. So overall European markets are still delivering growth, but it's leveraging compared to last year.
And how would you characterize the demand that you're seeing in the US market?
At the US, I'm optimistic. Yeah, we had a 3% growth in the first quarter for the US market. And now with the model offensive, with the X3 coming, the X4 coming, X5, X7, X2 is since 4 weeks now in the US market. We deliver a huge push into the X world, which are exactly the cars which are demanded by the US customers. So I'm optimistic that we see further growth in the US in the next month.
VW, Daimler and of course yourselves, BMW, are facing this antitrust probe. Are you putting aside any funds in terms of contingency in light of that?
No, because we always look at the balanced distribution and we are managing chances and risks, and that is part of our business.